salvation. Whom shall I fear? The Lord is the stronghold of my life. Of whom shall I be afraid? Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master with stringed instruments. Deuteronomy chapter 20, verse 4. For the Lord your God is he who goes with you to fight for you against your enemies, to give you the victory. Isaiah chapter 40, verse 29. He gives power to the faint, and to him who has no might he increases strength. Isaiah chapter 12, verse 2. Behold, God is my salvation. I will trust and will not be afraid. For the Lord God is my strength and my song, and he has become my salvation.
All right, good morning, everybody. We're back at it again with another Sunday call. And if I'm being honest, we've been pretty damn accurate. Like if you go back and look at what we talked about last week, which we're going to get into, and where prices basically arrived at, we've pretty solidly called the market with some really, really nice precision. Last week, we had a 100% strike rate with the live account that I trade with AMP. Okay, why is it doing that? So yeah, today, as we always do with every Sunday, we're pretty much going to go over the structure that we kind of use for the Sunday calls, Sunday prep. We're going to talk about risk on, risk off, basically the market as a whole. We're going to talk about bonds and yields, then DXY, then of course Euro USD, indices, and then maybe if we have time, we'll get into some metals or anything that you guys would like to recommend that we look into, because maybe you guys trade other assets and whatnot. But that's for the most part going to be what we're going to look over. We're going to look at higher time frame levels, liquidity mapping, power 3 ideas from the weekly to the daily, what we can expect for the news. We'll look at market maker models, our weekly invalidation or validation, right? Which for the currencies, it's been pretty spectacular, right? We called the short with price up here. And yeah, invalidation was up here and it never got tagged. So it continued to dump. But yeah, so that's pretty much going to be the structure of this call today for those that may be new. So stick around for the whole video so you can get all that information. If you don't have time, I do recommend that you guys watch the replay. You know, the channel may be a little bit small, but that does not have anything to do with any impact on our analysis. I've been trading for almost 7 years. So, you know, there's a lot of experience, lots of tips that's involved in these calls. You can also ask questions at any time. I'd be more than happy to help you guys. That's kind of why I have this call every week. And then, of course, in my private group, I'm live every single day. And if you're interested in that, you can obviously go click the link or scan the QR code just to take a look at that and what we offer. If not, you know, I have lots of students that do well just off of following me on YouTube, because, you know, the value doesn't get held back. Good morning, George Chowezi. Appreciate y'all hopping on. Y'all know the drill, right? Let me see. But yeah, can you guys hear everything? See everything okay? Before I start getting deep into this. Oh no, Chowezi, I was just pointing to the fact that our invalidation levels, they didn't get tagged at all, right? So it didn't touch this. So what happened? We continued to drop, right? There's a gap in here. Look what price did, right? It went up to the gap, to the open of the gap here, exactly to the tick. So it offered buy side and sell side where it was inefficient. There's no trading in here. So it ran up, shot buy side into it, and then it overtook it, balancing out that price range. We got a retracement, the wicks holding, inversion fair value gaps, breaker, and you can see the price just continue to drop, right? But we'll get into the currencies in a minute. So yeah, hopefully you guys understand the structure. Those of you that are a bit new to the channel. So yeah, we're gonna get into it. So the news this week, we have FOMC. Seems like every week we're having a crazy red folder news event of some kind. We're already halfway through March. One thing, because it is the 15th, we got to go to barchart.com. So now we're going to check to see if it's time to swap the contract months. The way you do that is you look at the open interest. So you go to the NASDAQ, for example. Doesn't look like the March contract is completely over with. Right, it's still moving. So this open interest line, the next contract month, right, which would be the June contract month, unless the open interest overtakes the current one, we know that we're still in that same contract month. Does that make sense? Let me see. So you see how we're in the March contract month? So yeah, the way that you would understand, okay, it's time to swap the contract months. You got to see the open interest for the next one, which would be the June contract. The open interest has to overtake this one. Has to have more, basically. Open interest is just the liquidity and positions that are open on a particular asset, or contract month in this case. That's pretty much what that is. Open interest can be a complex thing that people overcomplicate. All that word is mentioning is the liquidity. You know, how much liquidity, how much participation, and you want to be where most of the participation is, and you can see that the June contract is gaining. So it's not quite there yet. We are like maybe a day or two ahead. So pay attention to this for the next couple of days, because it'll determine whether it's time to switch or not. And then of course we will do that when the time comes. Yeah. So again, we have FOMC. You got to think power 3 every time you start a call or start a call. You start a weekly prep or your day at the beginning of a week. You always want to think power 3. You always want to think, okay, well, what could the profile potentially be? This is before you get into liquidity, right? Like the previous and current high and low of the previous candle and the current candle. PD arrays that are in close proximity, that type of thing, right? But before you get there, you want to make sure you lay out the groundwork for what the week could potentially present us with, and where is going to be like the most volatility going into this week. And obviously, we do have orange folders here on Monday and Tuesday. You know, it could be hit or miss depending on what price is going to open up and do. So we'll see what happens. But again, Sunday, Monday can generally be classified as consolidation, manipulation. Sometimes that manipulation bleeds into Tuesday if it's reaching up for a level or lower for a level that it's going to use as counterparty to whatever the narrative is. But Tuesday and Wednesday have a pretty solid chance of creating the high or the low of the week, especially if it's a classic sell week or classic buy week. you'll see the characteristics very clearly pop off the chart at you. And many times, if it's going higher to go lower, you can also frame a market maker sell model, or if it's going lower to go higher within this time, you can frame a market maker buy model, or it can be continuing in a larger market maker model at a different phase, right, within that. These are things you want to think of, right? And of course, Wednesday has all these crazy news, federal fund rate. So we got a double whammy right here. We have federal fund rate and FOMC. I may be around to do a live call. It'll probably be in my private group. So those of you that are in the private group, I guess you can expect to have a call for FOMC. I don't normally do that, but I think, we can make adjustments for this week just to go over it. But yeah, this is going to be a very, very volatile, very chaotic day, maybe even a chaotic week, because it's the quarterly rollover when the open interest overtakes the current contract month, which I'll keep you guys updated on when the time comes. But hopefully you can go and do it on your own with how I just showed you, because this is something you got to continuously do every year, every quarter, unless you're trading the continuous contract. But as I've shown before, there sometimes is discrepancies. Like, for example, I got a good example of the discrepancy. Okay, so if we take this NASDAQ here, you see how the NASDAQ tagged that fair value gap? Well, if we take ourselves over to the continuous contract, it hasn't quite gotten there. That's a huge discrepancy in price, right? So if you're trading the continuous contract, it's okay, but keep in mind that you should be paying attention to the current contract month, because price not hitting this versus it hitting this is a huge discrepancy. So I think it's just best that you focus on the current contract month and keep tabs on it. It's not a lot of work. It's not overly complex. If it is, you can ask questions and I can make it not hard to understand. Hopefully the way I taught it, though, makes it not hard to understand in terms of the open interest, how to gauge when it's time to switch. Let me see. Troy said, tell my dad was something. So, okay. Yeah, no worries. Have a good rest of your day, brother. So, yeah, we'll see what the profile is going to be as we start the week, Sunday and Monday. Preferably, we let that go to give us some information. Obviously, there's ways to trade it, and I will be live with my private group because we go live every day, and we'll talk about what it's going to do. We'll find setups like we always do. But those of you that are new, hopefully the structure and mindset makes sense when you're looking at the news events. Again, the news events also, if you're looking for a higher time frame delivery to a particular level or away from a particular level, the news events act in a similar way to the higher time frame as macros do on the lower time frame. Okay, so it's a good way to view how to basically dissect the news or how to use it as a scheduling and timing tool, because that's how you can be effective with the news. And then, of course, watch out for the red folders. And yeah, so with that being said, let's move on to our first analysis. So we did have SMT at the highs up here. Go to the weekly chart. We got the failure swing here. Let me see. Yeah, so that failure swing we talked about the other day has led to this huge decline. This huge decline has had a negative effect on the foreign currencies, which is what made this high probability and why I stuck to it and why I called it before the fact last Sunday. I also called that live with my private group, talking about a short. Those of you in my private group can attest to that. So we've walked this thing like a dog. It's been so accurate lately that I've been wanting to trade currencies. I haven't chose to do so because I've just been absolutely destroying things in the indices, regardless of what the condition's been. And again, my private group can also attest to that as well. But yeah, so maybe I'll mix in some overall trades with the different assets Maybe we'll incorporate gold and silver too if things look reasonable. But again, that SMT has led to this decline. Remember, the first thing you look at when you look at a new week, you got to look at the current high or previous high, that's what this is, for the week, and then the previous low. And then anything in close proximity. So if you just drag your view to the left, we could pretty clearly see that there's that sell side liquidity pool. If we zoom out a little more, we have more. Right? We have another one here, here, all these. That's all liquidity. Okay? It's all reasonable liquidity to pay attention to. For now, though, this is what's most important right here. Okay? We got the low here. It's technically a relatively equal low because of this candle. But yeah, so we got low, high, lower low. We have a low, high, lower low breaker there that delivered, which we talked about live. This was a market maker sell model as well. I said that once it got down to here, it should be quick, and it was. It was low resistance. But pretty much everything that we've talked about in terms of this asset has came to fruition. So, you know, with that being said, we're going to stick to the same objective. We got a bullish candle here, creating a bearish order block. Got a little gap in there. Price left it open as a breakaway gap. But yeah, this order block, it's also a breaker. We had this wick in here, which was a balanced price range. We said that it should hold the middle of that range. It did. 50%, 75% of the monthly fair value gap's been respected. So again, the most important thing that we're going to look at to start the week is Friday's high and low for Monday's trading, because the next candle that's going to open, what's it going to do? If it's going to get down here, it has to break that first, right? If it's going to get up here, it has to break this first. Okay, but we have a bearish breaker in here. Go to like the 2-day. Let's scrunch this up a little bit. We have the down candle here, high, low. So that in itself is a bearish breaker. All right, if we move up, let's look at the weekly chart here. You can see that this down movement, this wick in here, that's going to be something that we got to monitor and pay attention to. And again, if this continues to do what it's doing so far, and we keep going lower, that is continuously building sentiment and influence in the foreign currencies and the indices to go lower. That's why we start here, for those that may not know, that may be new. We start at this asset because it gives us a rough picture of what could be expected going into the other assets. If this is going lower, it also has a reverse impact on the DXY. So lower bonds, higher yields equals higher dollar, and then lower other assets, okay? And that's just the way it is, right? You can fight it. You can, you know, look at the lower time frames and get fooled and tricked. But at the end of the day, students that follow this, like we do, we're going to be on the right side more than we're not. And again, we've proven that over time and time again, over and over again. But yeah, so this wick in here, the potential bearish breaker idea, we should not see price get beyond the 50% here. We also got a monthly bearish order block, right? It's also a monthly inversion fair value gap over here. If we were to go to the monthly chart, it's right there. It's from a while ago. It's right there. We also have this gap in here too. We also have this bearish order block here too. Okay, so unless this changes, we now, like if this was the 5-minute, we now have a change in state of delivery from this retracement. We have respect to this wick, respect to this wick, and prices now again change state of delivery. So a retracement back into this lower level would be permissible, but look, we have this wick here too. So 50% of that ideally doesn't even get traded through at all. Okay. And we should then continue to try to target these downside objectives. And we have a extension level over here too. Price may reach to that long term. It's kind of a ways away. It's probably going to take maybe a month or two, maybe more to get down there if it does get down there. But, you know, we'll keep tabs on it. And then, of course, we have the low down there as well, plus this low. So these liquidity pools are significant as price wants to continue to drop, okay? So that's going to be my opinion for this asset. We're also at a quarterly wick, 75% level. I think it just about maybe getting through that. So we've got this wick here. I think it's that one. Where is it? Just double check. %. So let me see. Take the fib. Okay, so 75% would be on this wick. So the 75% of the quarterly wick, that orange line here, I'm assuming it was this one. Yeah. So I think it's actually going to be a little more eventful. I mean, it's good to keep that. But I think this wick in here is going to be pretty important. So we'll keep tabs on that. Let me see. Just the quarterly. We'll go with the weekly. Do I really not have it? I don't know what happened to my quarterly wick level. I guess I'll create that right now. Give me 1 second. Sorry about that. I got bad allergies today. Ugh. So yeah, if we go back down to the weekly chart, drag that over. Make it a little bit more pronounced. So yeah, 25%. Can actually now adjust that. Actually, oh. So put it right there. That is the quarterly wick, 25% level. So we'll walk this down as it keeps going lower. 50% of that wick is also at this low. So just another confluence. And then, of course, we have all of this to continue to monitor as a breaker. This here should act as a BPR. This is weekly, so I'll put the weekly markup. Okay, so that weekly perspective, it's important because if there's PD arrays that align as you're looking for executions, if you can align a PD array with one of these higher time frame wick levels, it's pretty dynamic. That's how ICT picks the right PD arrays, right? Apparently. And if you do some back testing, you'll see that there's lots of validity to that idea. Okay, so again, my opinion for this week, or just for this asset in general for now, is continued downside delivery. And any retracement is going to be looked at as a short-term premium to then go lower. So what's our line in the sand going to be for this? Well, if this down delivery here and this wick shows no respect and we end up immediately getting beyond this And outside of this monthly wick here, or a monthly inversion fair value gap, say it breaks through this order block, right? It's another reason why it should be sensitive to go lower. But say it breaks through that. We have a wick here. We have the whole breaker candle. We have the order block. We have monthly inversion, bearish. And then we also have a volume imbalance. You could see that that volume imbalance has had sell side and buy side and then sell side again, overlapping one another. And we've basically moved away from this fair value gap as well. So all of this, again, should be a balanced price range. So again, any retracement should be short term, and then it should look to go lower. I have the same overall objective for this asset too, right? The 5-year and the 10-year. I mean, the 5-year looks really obvious, like it's going to take out these relative equal lows here. Well, the trendline liquidity, not relative equal lows. So that's going to be my objective right there. I'm going to continue to try to see if this can go lower. Okay. So do you guys have any questions about that? If you do have questions, leave them in the chat. We'll move along pretty a little bit faster than normal. Okay. So now if we go to the yields, if the bonds are going to potentially go lower, the yield should just simply do the opposite, just like how Euro and GBP are versus the dollar, right? They do the opposite. It's an inverse nature to it. So that relationship is very similar to this when it comes to the bonds versus the yields. And again, the bonds indicate or have a heavy influence over the foreign currencies and the indices and commodities, and a reverse correlation with, say, the dollar. And then, of course, the yields favor the dollar. They're positively correlated and reverse the other assets. So one of the highest forms of confirmation for a narrative or a trending environment observation, if you can keep these in line with whatever your bias and narrative is on the asset of your choice, currencies or the indices, you can rest assured that you have a lot on the back end fundamentally pushing price in that intended direction. Like in this case, it's bearish. So with bearish bonds, bullish yields, we have bullish dollar, bearish indices until proven otherwise. And that's supported through intermarket relationships. It's supported structurally. And it is what it is. And there's no reason to fight that big momentum that's taking place, okay? And look at the dollar accelerating to the quarterly high that we mapped out, right? Again, we've walked this like a dog. I've said that if this stays available, if it doesn't break that, it'll continue to go higher. And if we violate the wick here, right, it should be able to rapidly increase. And we had immediate rebalance here. So buy side, sell side, buy side, sell side once more, immediately rebalanced the gap that was left, and it just accelerated. That's the characteristic of intermediate rebalance. We also have this high to that low. It's also a breaker here. If you go to the lower time frames, right, take this high down to that low, and price takes it. It basically created a breaker bullish too, with respect to the bullish fair value gap that we mapped out, which I called for buys in the last call, right? I favored it more unless this low was going to be violated, right? I talked about that too. You see the wick here, price respected that wick, and it's just absolutely accelerated. And we've been correct, 100% correct, okay? And you can go back and check the replays or just hop on regularly and you'll see if you're new, because we have nothing to hide. There's no reason to lie when things just work, right? So, yeah. So again, if the yields are going to keep doing this, we have the buy side up here. We have previous week's highs. Mark that wrong. Let me fix that. So we got Friday's high, Friday's low. That's going to be the first thing it looks for, but we have relative equal highs here. And that's previous week or previous month highs, actually. It's from January. So let me actually change that. It's the monthly high. We see that the 5-year is actually taken part of, or both of those liquidity pools So we'll see how price wants to treat that. I'm pretty confident that it'll open up and retrace a little bit. These ones may open up and just rapidly reach for the highs before it does that. But the undertone, the underpinnings of what's happening in the marketplace, at least from my perspective, which has been correct every week since January, is the fact that, this is going to keep going higher. This will keep going lower. And we should see the DXY, in that case, go higher continuously. We do have this wick in here, so I'll map that out as future target as price continues to rapidly go higher. Because it's been so aggressive, it may get a retracement, right? It may start to retrace a little bit. We have this market maker model that I painted out as well, delivering perfectly. Had a little bit of a pause in here, but nonetheless, nothing changed. And if nothing changes based on our analysis, then we don't change either. We keep it the same. So I think that we'll continue to see this run higher. We have this high to that low. That should be able to act as a bullish order block, this fair value gap. And or this one too should be left available. But at the same time, it could open up, leave this high, which was Friday's high, drop down a little bit, tag this. And as long as it stays above the 50% of this level here, this high to that low, 50%, as long as it leaves that available and preferably leaves these gaps open, we're going to keep rampaging to the buy side. I would not doubt that price is going to come down and clean up some of this here. Of course, you can map out the whole fair value gap like it shows here. There's nothing really wrong with that. Just know that when you have a wick like this that trades with a displacement, the main thing that the algorithm is going to seek is the part of the displacement that has no wick involved, because in that case, it's actual inefficiency. There's no buy side, there's no sell side in this buy side delivery. So when they retrace, that's what they're going to reach for. And then, of course, we have this wick. So because of this phenomenon happening, we should not see these get traded to. Okay, that's just the way it is. That's the 4-hour perspective here. So if it does open up and drop lower, that's what my expectation is going to be. I want to see heavy sensitivity to that level and a very intentional run into it, but then leave the rest of the fair value gap open. That's what I want to see when this type of circumstance is unfolding. It's true in the lower time frames as well. Very same thing. Everything's fractal. So yeah, opening up, retracing to then continuing to go higher. It's not unreasonable. And again, we did take out this liquidity. Let's take a quick glance at the monthly perspective before we move on. We got this big wick in here. I think it's going to be a good idea to map that out. So yeah, 50% of that wick is there. Again, why are these levels important? Why do we even concern ourselves with this? Right? Well, if price is going to continuously run in your direction, say it's bullish or bearish, and price breaches, or you notice that price breaches some of these levels, they are dynamic support and resistance levels helping you continue to monitor order flow moving in your direction. Right? If it breaks through it and then just rapidly changes and goes to the downside and doesn't hold it as bullish PD arrays or bullish support levels, quote unquote, then obviously something might not be right. You may have to readjust. There's other things obviously that we have to use, like the PD arrays and how they're being respected with wicks on the lower time frames, order blocks and fair value gaps on those lower time frames, other PD arrays in convergence with these basically grid levels created by higher time frame fair value gaps and wicks when you break them down. Okay, so they're just significant in terms of watching the characteristics of price holding towards a particular direction. Okay, so yeah, We'll see how this is going to be treated in here. We do have a 25% level that I will actually put on the chart, to be honest. I think we will go like this. So yeah, we'll keep tabs on that. If we take it off of full screen, okay, yeah, it's populated. So yeah, very interestingly as well, we have relative equal highs up here. Okay, and then if we zoom in a little bit, we can also see how this is also a huge new day opening gap. Maybe it's not a new day. Oh, no, yeah, it is. 14. Yeah, right there. That's a new day opening gap. Very, very large new day opening gap level. That's why I was so dramatic getting up into that level. And what do you notice here? Well, there's trading here once, twice, a third time. And we could see that the area that was left open was this level. How ironic that it traded right into the upper portion, and then that's where the week stopped last week. Isn't that a coincidence, right? It beautifully went right into it, offered buy side that was inefficient, right? Because there's sell side in here, but it's offered buy side, so now I wouldn't be surprised if we start to offer sell side and then look to try to go even further. Okay. So it's also a volume imbalance here. You can see that too on the weekly chart. So yeah, these levels are significant. Okay, we're gonna actually map out the whole thing in here. Keep that on the chart. Okay. So yeah, I don't really think there's much more. I'm trying to think. Is there anything else? Yeah, there's not really much more I'm going to be concerned about when it comes to the DXY. Again, this continuing to go higher, right? It came off of the wick down here. We narrated this whole thing, right? I said that if it breaks this, that's going to put this high in jeopardy. Created a type 2 dealing range. It also created a wick stop run, large stop run. Ran up for a potential retracement. We were talking about this being a potential bearish breaker in here. It treated it as such for a short time. And then what we notice is that once we created the rundown into this wick, it respected that and then changed state of delivery. This is a model I teach. You know, this is familiar to those of you in my private group. But then we got that change in state, and we were pretty confident once it broke through and respected this here, this displacement put our objective up here. And you could see that it went perfectly to the tick, closing in the whole new day opening gap from a while ago. Okay. Back in May of 2025. Isn't that interesting? Something from literally May of last year was used last week to the tick. Amazing. Okay. But yeah, with that being said, do you guys have any questions at all that you guys would like me to address before I move on to the other currencies? Because that'll pretty much be it for the dollar. So yeah, still one in the chat if everything makes sense. Appreciate you guys that hopped on. if only people's attention span was, bigger than a squirrel, they'd be seeing what's happening here, because what's happening here is revolutionary. Thanks to ICT and the things I've learned from some of my mentors, lots of students in my private group, even those of you on my YouTube channel here, you're doing very, very well. And I couldn't be more humbled and grateful for not only the attention that you've given to and trust, in my abilities, but seeing your guys' progress is absolutely something amazing. So, yeah, and it's ironic. There's a commonality between those that stick around and get the wisdom that's given through almost 7 years, and those who just show up every now and again. There's a stark difference, and those of you that do stick around, for a long time, watch all the content, or you're in my private group with me every single day, or here on YouTube every week, you guys are seeing progress that you didn't get anywhere else. While there's many people claiming this and claiming that, many people saying that these concepts don't work, they're overly complex, or it's too hard, right? They're picking the wrong hard. They're not believing in themselves, and they're not just taking what's being taught, going and looking at it on their own and seeing just how amazing these concepts are. And again, I'm not a rocket scientist, but, these complex ideas that are taught can very easily be simplified, which I hope I do a good job of doing. And based on your guys' testimonials and conversations I have with many of you, I've had over 100 plus people tell me that what we do here is unlike anything else. It's obviously ICT's concepts. I'm not ever going to claim that I created something. I did create 2 models, which are my Razor model and the Wick model that I just outlined for you, and teaching at great length in my private group. Those are 2 things I discovered on my own. I didn't create the PD arrays. I just used pieces of information ICT teaches, and my understanding of how to build a model, because ICT has taught that before. And, it just made sense. And the stuff repeats. It happens every single day at every turning point. Most turning points for the Wick model. But the Razor model shows up every day, all day long in every asset, just like the 2022 model. But it's not the 2022 model. And those of you in my private group see the stark difference and just how effective it is, right? Okay, appreciate you, George. So since everything makes sense, we'll continue to see if we can keep this momentum going. I wouldn't be surprised, though, if it opens up targets Friday's low here. I'd prefer it not to get down there, but, again, the 4-hour is subservient to the 8-hour and these upper time frames. So if it does blow past this level, we then would have this to pay attention to, okay? Let's see, where is it at? So what does it look like on the daily chart? So again, if this is going to continue to be bullish, this high to that low, all that delivery to the sell side and to the buy side now, it should leave this whole entire range as balanced. More specifically, this one as well, because we have buy side that's overlapped with all this sell side. We have pretty reasonable targets up here too to look for. Okay. So we'll keep tabs on the 50% there. We do have 25% here. So that should be able to be sensitive as well. And then as it goes up beyond these levels, they should still get used to support your idea. Okay? So yeah, with that being said, we'll move on to the currencies now. Kind of talked about this a little bit earlier. But again, the call from last week and then all the calls throughout the week itself, aside from last Sunday, we predicted this. We painted out the invalidation. We labeled the target, right? We looked at, potential downside objectives, and it's went from up here all the way down to this yellow box, which again I had outlined because this small little piece of price delivery there's a wick here and displacement. Price came down, presented a wick here, leaving that little area in price. So that was our draw on liquidity. And it, again, hit it to the tick. Okay. And then last week, we started talking about how that gap is in here. It may offer buy side, do this retracement. This is a bearish order block. Okay, if we go to the daily, we also have the down wick in there too. So price came up into that, respected it. Okay, we also have a low, high, lower low. That is a bearish breaker. We also have an inversion for a value gap here. Right? So again, as long as all of this continues, we will still continue to see price go lower. It's also a weekly bearish order block. It's a 2-week exactly. So that should be a very sensitive level if it does look to try to retrace into that at all. Got these equal highs taken on the dollar. Now, whoops. Now the equal highs that we're looking at is going to be up here, okay? Again, you see that new day opening gap like I mentioned. So these equal highs up here, very, very strong candidate for a draw on liquidity. It's so close that we may even open up and just race into it. Again, if that happens, if it keeps going higher, then we'll continue to see this drop, especially with the bonds and yields supporting higher dollar, lower bonds, higher dollar, higher yields, lower bonds, lower indices, and lower currencies. Fundamentally and intermarket relationship-wise, we are absolutely supporting that thesis, and I'm not going to change that opinion. So we're going to continue with this down arrow opposed to what we're looking for in the DXY. And again, the current candle, the high and low are important. Anything in close proximity to like this low here, which we can actually outline that too. So that's going to be a pretty obvious liquidity pool for price to reach for. And just structurally, it's respecting bearish order blocks. The wicks are being respected, right? Once it creates a wick and then trades away from it, when it comes back into it, they're very much being respected, okay? So we'll continue to see if that's going to hold. Got this wick in here as well. I can actually take this off now because this range was from this high to that low. So we can actually take that off. And we will move this. Move that to that. This was low resistance liquidity run. I called that. Basically smacked it. I also called the short live with my private group to go lower. I just ended up engaging the indices because that's where I live. But yeah, any of you guys that do trade currencies, just because I trade the indices or focus on other things, I still do analysis on this, and it's just as effective. We call overall currencies and everything else all year. It's pretty fascinating when someone talks about 5 different assets and every single one of them, generally for the most part, with a high 90% accuracy rate, comes to fruition all at once, every week. I mean, no one else is doing that, right? Except ICT and maybe a handful of other ICT traders. There's lots of people that do and talk about a lot of things and claim a lot of stuff, but it's like deeply proven here. So hopefully you guys are getting value from the things that I do provide outside of my private group. Because again, my whole goal is just to help you. So I hope that you've allowed for me to help you and you're being coachable in your mind, and you take notes and you watch what happens from Sunday, and then you look at what happens as we end up going to each week, right? Because the results are shocking, and you could put 2 and 2 together. Of course, this isn't financial advice. I'm not here to put you in trades. I don't provide any signal service. I do call moves and where I think they're going to go. But that's in no way to encourage you to do anything until you prove to yourself the efficacy of what's being talked about and what's being shown. Okay, so that just about does it for the currencies. Again, we'll just keep tabs on this, see if it retraces into that. I don't want to see it really break outside of this gap in here overall. We could now use the whole fair value gap because it's completely filled it. So now the quadrant levels on this fair value gap here are going to be significant. So we will map this out here. It's also at a quarterly wick, as you could see. Put the daily wick measure. Okay. Honestly, oh wait, whoops. That's very interesting. The 8th levels for this weekly wick, or daily wick here, right? This large wick right there. It's very interesting how it lines up pretty perfectly with the fair value gap level quadrants. Almost perfect. Very good, very solid confluence. So again, this is our main first objective, second objective, right? It may just look to target that for the week, and that'd be fine. Outside of that, though, if it does break through, we have this wick here, and we have a 75% of that wick and the low. So those could end up being targeted. We also have the 50%, so that could be targeted on this wick as it goes lower. It's more detailed, more effective, more so than if you were just using like this low. Because what can you do if it doesn't reach this low right away? You just don't have a trade until it takes it out? No, right? You would use the wick. As it trades into that, those are all targets. And if you could paint something towards those levels, you have multiple opportunities, many opportunities, okay? So yeah, that just about does it for the currencies. Until something changes, we're going to stick to the same thing. You notice how we had target here, right to the point, right? Came down, smacked it perfectly. For another week of accuracy, proven live, publicly, and in Zoom calls every single day with an audience. And if I'm lying, if I said anything that's not true, if I come out here and fabricate anything that I'm talking about, I have many of my private group students that watch me every single week. And if I was lying, they would have no reason to follow a lie or, make testimonials about things that are not true. They are true. So you could rest assured that what we talk about, there's an efficacy to it, and it's just up to you to prove it to yourself. Because I could talk about anything and everything, but if you're not going in and putting it to the test, and you're following someone blindly, that is a you problem, and that's not not a very good way of doing things. So I encourage you to go and test what I'm saying. Go into the chart trying to see me do it wrong. Expect that I'm going to do it wrong, and then within a couple of examples, within a couple of weeks, you'll start to see the reality and the efficacy to all this stuff. Okay. So yeah, with that being said, hopefully all that makes sense. Now we will move on to the indices. So yeah, if you guys remember from the last couple of weeks, I was talking about this gap in here. I said that we took external range liquidity. We were respecting the wick quadrants from January. If you do go back and remember the calls that I was doing in January, you notice that I talked about this wick. I broke down the quadrants. We traded to them, and then we traded away from them, right? And then, of course, once price got down below this wick aggressively like this, I pulled your guys' attention to this well before anybody said anything, including before ICT even said anything. We were talking about this, okay? He talked about it when we got closer. He probably knew, but he didn't talk about it super, super early. He didn't make it public. I'm pretty confident that he already knew. It's ICT, right? But out of everybody that was making call outs, we were ahead of this. We saw this before anyone was even talking about it, including ICT. That doesn't mean that he didn't know. He probably did know. He's ICT. But again, publicly, nobody else was mentioning this. that I saw on social media, and I follow thousands of people. And I'm sure if you think about it and can think about what was being observed in this area, most people were not talking about this gap, which is very interesting because when you have displacement on the lower time frame, what's the next thing you want to see? A retracement. So we had displacement here. We had the wick get respected. Stops were taken here, right? And if there was another one over here, it took that as well. And then it declined, right? So external range getting taken or massive displacement in one direction. The next overall objective is to see if we can get imbalance or inefficiency getting traded to at a discount relative to where price is at. And we basically walked this entire thing, and it's done exactly what we said it should do. One thing to keep tabs on is the fact that we do have an SMT here. Okay, so that may be something that eventually ends up being significant. So we'll keep tabs on that and see if there's any real interest for that. We also have this large wick in here, which is a quarterly wick. 25%, we're trading back into it. Okay, so if we take that, start walking price down a little bit to make sense of the markups. This is a new week opening gap too, right? Notice how there's a lot of trading inside that gap overall. We have a couple of new week opening gaps in here too, right? When you're in consolidation, you can expect that there's a lot of gaps that are going to be influential. When they're just like bundled together, it could be a bit chaotic. And let's see, does that populate on this time frame? Yeah, so again, there's that new week opening gap here. Where is, okay, there it is. Yeah, right there. See? So that new week opening gap plus the quarterly wick, right? All these levels are significant. So price should, if it's bearish, continue to respect that, right? If it breaks through a level, it should come back, touch it, lay a PD array on it, or maybe there's a PD array that already got laid on top of it previously from like, the 8-hour, 4-hour, 1 hour, or even, the daily chart. When it returns into that type of level, it should be very responsive if you're correct. And in this case, I think we are. 50% right here of the quarterly wick. You could see how it beautifully respected that. We have sell side, buy side failure. There's SMT at the highs up there too, if I'm not mistaken. It was up there. That's where the SMT was. And if we take a look at the highs comparatively, we see that they have all created the wick, respect to the wick, and then declined. So order flow is proving to be bearish by how it's trading previous new week opening gaps, trading into them and then pushing away. Order blocks, how it's holding at the 50% after it trades into it and then pushes away. And fair value gaps, volume imbalances, prices trading to them, to the upside, and then pushing back away. So that clearly states that order flow is still bearish. And until that stops happening, until that stops working and we violate at least 3 PD arrays on these higher time frames to the upside, it's going to keep going lower. That's the simplest validation principle that I teach, that I've learned over the years studying ICT, the 3 PDA rule, okay? And then, of course, the way that inversions are used, how price treats wicks when it is going bearish or bullish. How do you pull information from that to help support whatever it is that you're trying to see price do, right? In this case, to go lower. The wicks, order blocks, fair value gaps, new week opening gaps, any other gaps, the quadrants of higher time frame fair value gaps and wicks, how it treats those levels. If it's continuously trading into them and going lower, and it's leaving levels like this high, or at least 3 PD arrays above us are being left intact, that is how you verify in the most simple terms whether we're bullish or bearish. And then, of course, you go take it even a bit further, and you go with seasonality, you go with intermarket relationships, and just off what I just laid out right there, it's a good enough system that's repeatable for you to continue to trust a narrative. Okay. Just what I said in less than 2 minutes, that's enough for you to be able to gauge what's happening. And then you can also add market maker models, right? Because that's, something that doesn't need a bias, but it is supported by whatever you determine on the higher time frame generally. Okay. Market maker models can be validation tool. The way Power 3 is delivering every day, which is just essentially whether candles are going higher, creating up candles to then break them and go lower. That's Power 3. So if bearish Power 3 is continuously overtaking any type of buy side Power 3, then you can rest assured that we're in a bearish trend overall. Okay? So again, I can't really make it much more simple than that in terms of how to determine bias and narrative. So, hopefully that makes sense. And again, the more time that you spend here on these calls with me, calling the market every single week, every day in my private group, the better you become, the more clarity you get. And that's my main objective, is to get you clarity. And I think I've been doing, based on testimonials, a pretty solid job at doing that, at getting that achieved. So, I hope you guys feel so as well. And again, if you guys have any questions, just let me know. But given what I've just said, given all the analysis that we've done up to this point, my assumption would be that this should keep going lower unless 3 PD arrays are violated to the upside. Now, if we look at where price is at here, we're inside of a wick, okay? If this wick was to hold price, if the 25% of this wick here, right, the quarterly wick, was to hold price, if we were to get back inside of this new week opening gap, if it was to violate this candle, the 50% of this up delivery, which creates a bearish order block, and then we trade outside of something like this volume imbalance, say we also, is there anything else? We have this wick here too. Say it trades through that as well. Say we take this high to that low, which is basically a range. Say it breaks the 50% of that. Say we take this high to this low here, right, wherever it gets created, and say it rapidly runs higher beyond the 50%. And if you wanted to keep it even more simplistic, as long as this high stays intact as well, that would be price continuing to support downside delivery, essentially, okay? You can keep it that conservative if you would like, but again, you could just use 3 PD arrays, which this would kind of be a part of that, or you can just use, the reaction from this, whether it reacts or not, right? So yeah, this up movement, the wick, some of these PD arrays in here, if you can map 3 of them getting violated, or just simply look at this high, that's going to continue to support us going lower. And the 50% from this high to that low, it should be respected. This should be a balanced price range if we're going to push away to the downside, right? So unless any of that changes and gets disrespected, my main objective, until proven otherwise, is going to be continuous downside delivery, continuous up candles that are created on the daily chart being respected, and on, like the 16-hour, 4-hour, 8-hour, 1 hour, 1 hour can kind of be a little more volatile. But as long as it eventually snaps back in place with what's happening on this higher time frame, we'll continue to keep going lower. Okay, so that's my main objective. And we have this quarterly fair value gap that still has a ways to go. We could still continue to try to push into that up to the low there, because again, there's no buy side delivery in there, right? It's all bullish. So, they do have all of this. There's no wick trading into that to make it so we believe that, okay, part of this is balanced. It's not. It's imbalanced. So that's why they trade into these levels. And then, that's also why they, take external range liquidity and then try to seek internal or inefficiency before it looks to, give another leg, because they got to offer both sides and be efficient. And if it's one-sided like this and there's not even a wick or anything else offered at that level, sell side has been not so represented. So they're going to most likely look to try to target that. Ironically, if you think of the yearly Power 3, this is exactly what you want to see. just like last year, right? I painted the whole idea about bullish power 3 from last year's quarters, 1, 2, 3, 4. Okay, 1, 2, 3, 4 here. So it was a drop for the first 2 quarters, and then price ended up rallying aggressively. Well, the first quarter starts in December, so part of this is, this is 3 months, so I guess it encapsulates it. So it dropped for the first 2 quarters, right? The second quarter punched lower, tagged out a yearly bullish order block, if I remember correctly, which again, we mapped that out as well. All of this is from the tariffs. We were just as accurate last year and the year before that as we are this year. So, it doesn't matter really what's happening. It all still continues. But bullish power 3 is clearly represented in this. So lower for the first 2 quarters. Later in the second quarter, started rallying, then third quarter, and then fourth quarter. Okay, and then we've come off of that. Now we're doing a very similar thing, right? We got the open price here for the year. Okay. Okay. And so now we're below the open price. So if this is going to end up being a bullish trend overall, then we will eventually see price snap back above this, preferably in the second or third quarter, because that's when things somewhat start to pick up. It's the most dynamic upside delivery throughout the year when it comes to the yearly range. It's all power 3. The yearly candles are pretty easy to identify and work with when you understand these basics. But that's why we spend so much time on power 3, all these other things. It's just super important, and then you take the lower time frame observations and tactics to the higher time frames, and it doesn't change. It's all the same, right? As soon as you realize that and start to get familiar with how long some of these higher time frames take to deliver, while keeping conviction, even though it's taking a little while to unfold, the better you'll be at sticking with bias and narrative on a long-term basis, and the better you'll be at identifying counter-trend moves and understanding that those counter-trend moves are just that, they're counter-trend, and you just couple whatever the counter-trend is to what the higher time frame main objective is, and then you can know when to trade against the trend and when to trade with the trend, when it's not time to be with the trend because it's going against it, and then when it's time for the trend to continue, which is a lot of times around levels like this when they get fulfilled. We do have S&T here. We do have equal lows as well. So, we'll have to see what it's going to want to do going into this new quarter, because again, we're in the quarterly rollover period. So, we may see some shenanigans taking place, because again, this is a 3-month chart. Because power 3 is on every single time frame and perspective, and because there's a 3-month candle here, don't you think that power 3 would work for each quarter too? Something to really think about, right? Because it does. It's true. Power 3 happens on a quarterly basis too. So if you can look at a quarterly chart at the start of a quarter, which we're going to do in this new quarter when it starts, we talked about that here in this candle back in January. If you go back and look at some of the replay or some of the replays from some of the videos, we talked about quarterly power 3. It's been a bearish quarterly power 3 to target the gap in here that was left. That's another scenario that I painted to kind of justify this and how price would use delivery to get down into that, and what delivery it would use to get down into that framework wise. And you could see how that's beautifully unfolded. These are things that people don't spend a lot of time on. They learn power 3 on the lower time frame and they think that's it. Or, they learn all these other things and they put to the side some of the basics like power 3. And it's like, why are you doing that? When a commonality between successful ICT traders is the fact that they understand market maker models and they understand power 3. And they understand these higher time frames and how important they are for that lower time frame perspective and consistent analysis. So keep that in mind. If you've discounted Power 3, I would not do so. I would actually amplify your studies, amplify the importance that you place on Power 3. It's one of the more basic things that ICT's talked about for literally over a decade publicly. And some people don't spend enough time on the basics, but here you kind of have no choice because I stick to the basics. I mix in advanced things here and there, but for the most part, the basics are what allows me to perform the way I do and have the clarity and consistency that not only bleeds into you guys, but completely immerses my performance in. So yeah. So again, with that being said, I think that this should continue to drop until proven otherwise. The S&P still has a little ways to go. We have an implied fair value gap here. Perfect example of what an implied fair value gap looks like. Wick, displacement, wick overlapping the other one, and the displacement. So this little zone in here, this little itty bitty zone in there from the 50% of this wick and the 50% of this wick, that little itty bitty piece of price delivery is a PD array. Okay. So that may be a draw aside from these equal lows for the S&P. That may be a beautiful draw to get us down into sell side delivery. Just for added context and targeting, I would not be surprised if it tags that to the tick and then pauses out and just waits. Or it simply tags it and then immediately runs back to the buy side. Or it could invert it. Like if it just hits it, uses it as a counter PD array to the downside move, and it bounces a little bit, maybe comes back into this wick, and then immediately smashes through it. That's another option too. So yeah, we'll see how price wants to treat that in there. The main objective though is these equal lows. All right, the month hasn't ended, so it hasn't fully set these equal lows for the month. It did close there on a weekly basis, so these are at this moment equal lows. So I wouldn't be surprised if we try to target that. I mean, it's close enough to that level for them to do something like this because of all the stuff happening and wars and whatnot. I think every single week we've had a pretty nasty gap. So I wouldn't be too shocked if they open up with a massive gap like they did over here just to get us down there. But, oh yeah, this is the monthly chart. So on this time frame, it may not show it. But on the weekly, it might. We've had 3 consecutive gaps, or so weekly, so 2, at least 2. One here, one here. So I wouldn't be surprised if that's what they offer again, another gap to target this. This implied fair value gap here on that monthly is also in conjunction with the failure swing here, which may act as a low resistance run, assuming that the bearishness is going to continue. So that's a nice target to look at too. So we'll keep tabs on that. And then again, we got the order block. 50% is right there. That could be used as a target too. And then we got these equal lows. And what do you know? We have an itty bitty volume imbalance down here too. I like this for I like this to be a target once we get down below this low. I think that's a pretty reasonable deeper target. First and foremost, though, we have this PD array, 50% of this. We have the failure swing lows here, and then we got the low, the equal lows here, and then we got the volume imbalance. Right? So I wouldn't be surprised if we get down there. That'd be pretty shocking to get us all the way down there into the range of last year, like the lower discount range of last year's range. Then again, with all the stuff happening, it wouldn't be too much of a shocker. So yeah, we'll keep tabs on that. Throw an eyeball in there. Let's put a crystal ball, actually. Okay. Let's use a target. Makes it more obvious. All right. And then aside from that, right, if we're looking at the NASDAQ here, of course, we do have this quarterly fair value gap that I would like to see price continue to break through. We do have an extension level here from, I believe, this high and that low, or this high and some other low that's on like the daily chart. Yeah, right there. This high to that low. The 2.5 standard deviation, which is a very reliable standard deviation projection tool. I mean, it's perfectly aligned with the equal lows here. Those equal lows, when you go to the weekly chart, they're also coupled with another volume imbalance just like this. And more importantly, it's also a fair value gap. Okay. So yeah, if the S&P does decide to get down there, it'll drag this down too. It's not unreasonable if this continues to be bearish and all the stuff that's happening continues to happen. So I'm going to keep that in my mind. But again, before it gets to that, we have the quadrants of this quarterly fair value gap. We have the low here from last week. We have wicks up here. We have an order block, more wicks, new week opening gaps. We have a mitigation block here, high, low, failure swing off the rejection block here. And then price broke down. So the down candle here is part of a larger mitigation block. So 50% of that should not be traded too. More so, I would like 25% of that, the lower 25% of this candle here, this down movement, to be respected. It's also a wick. We also have an inversion fair value gap here. Is that a suspension block? Yeah, you see that little gap in there? It's hard to see. There's a little itty bitty gap in there. It's very small. But that basically creates this as a suspension block. Okay? And again, the closer you zoom in on that, the more clear you see. So just know that that's also a suspension block. So there's lots of levels in here that are holding price that should be looked at for reason for price to hold this level and do shallow retracements. Maybe it wicks like it was doing the last couple of weeks, just to tag some of this again, stop people out for good measure. And then it looks to decline. I wouldn't be surprised. The March open prices here, we've spent a reasonable amount of time above it. So if it's a bearish month, we've now already put in the manipulation phase, which is the first and sometimes bleeds into the second week. We're in the third week of March. So generally the middle part of the month is when the expansion will take place, just like how the middle days, Tuesday, Wednesday, Thursday, are the expansion in a weekly candle, a weekly range. The same dynamics are true from the quarters for the yearly Power 3, for the yearly range. Same thing's true for the monthly range with each week in the month. Same thing is true for each day in the weekly range. And the same thing is true for each session when it comes to a daily Power 3. So it goes from the higher time frame to the lower time frame, and it does the same stuff. And there's ways to break it down into quadrants, right, with 4 different parts. The first sometimes bleeds into the second with consolidation, manipulation. The middle portion of these time intervals is generally when you see the expansion in the higher low extreme. And then, of course, you also can see the last week, sometimes within the third piece of the quadrant you break down, can start the retracement, but then the final segment like the last week, the last session, the last quarter of the year, all of that can trigger in a response going opposed to what was happening previously for Power 3. Okay, doesn't matter what time frame you look at, doesn't matter what interval, the dynamics still resonate. You just have to break down whatever time frame you're looking at into quadrants, and it'll do the same stuff with Power 3 characteristics. Okay, so we're in that expansion portion, right? The likely expansion portion of the month of March. We're in the middle of March. We've had the first and second quarter deliver. What has transpired from that? Well, we basically went above the open price twice, accumulation potentially for the short positions, and then we've seen price continue to give up the ghost and go lower. So I think that unless that changes, unless we get beyond some of these levels up here, like I mentioned, we'll continue to see any type of rally present a short-term premium just to continue to sell off. And then again, when we look at the daily chart, we can get a little more details. We have a new week opening gap in here too. Here, 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 and here. All of that is overtaking this level, along with some of the other PD arrays that we've talked about this morning that also support continued downside rejection objectives. Okay. So yeah, hopefully this was insightful, but that just about does it for the indices. Because we finished a little bit ahead of schedule, I think we will go ahead and look at gold and silver. You notice how gold and silver are following the other assets? We are in a pretty symmetrical market dynamic right now. So that is beautiful. This is what happens around this time of year. Generally, it's downside delivery, okay? Seasonally, that's just the way it is. If you go back and look at the last couple of years, you'll see that the characteristics are very much, manifesting that. The start of the year, because you think yearly Power 3, like I described earlier, So the first part of the year should be manipulation, maybe declines going against it if it's going to be bullish for the year. And then, of course, as we get into the second and third quarter, a lot of times things change and pick up a little more. So we'll see if that continues. But we see that the gold and silver charts are doing exactly what they're supposed to do when it comes to the symmetrical behavior and intermarket relationships. Okay, it's respecting this very nicely. We had a shift below this. I said that if this fair value gap can't get traded through, we have this bearish breaker. We have the trend line liquidity. Gold and silver are another asset that we have called with max precision and accuracy. It doesn't matter what asset class you trade. Again, what we do here, it's pretty undeniable. There's no guarantees, and that doesn't mean that you'll be profitable, but at least it gives you a good chance to be. If you follow the dynamics and what we talk about. But yeah, so we got a breaker here. Price came into that, left a piece of the fair value gap open, stayed below on a closing basis the upper body portion of the breaker candle. We closed right at the 50% there with the bodies. That's telling you clearly that price is holding that level. This same phenomenon is true when it trades into a wick like this. That phenomenon's true as well when you trade into a fair value gap. Depending on where the bodies close, I don't care about where the wicks go. Preferably they don't overtake the whole thing, but even if they do, the bodies are what you want to pay attention to. If you're bearish and say a wick shoots through your fair value gap that you're looking to take an entry on, right? The wick doesn't matter. That's doing damage. It's stopping people out, right? It's offering price. Where the bodies close, though, that determines whether something is viable, right? At least it's one of the key indications that helps us determine whether something's viable, okay? And so we can clearly see that this not only closed beyond or below the low of this fair value gap at the 50% of this bearish breaker, which they're coupled together. This created a BPR as well, so it's also closing below the 50% from this low to that high. That's a balanced price range. And we can see the price change state of delivery here. That's how you know for certain if you wanted to wait. And maybe you didn't trust it right here. You wanted to wait. What do you wait for? To be even more conservative. You wait for a change in state of delivery after these characteristics have manifested. And then so long as you do that, you should be able to be on the right side of the market, right? Or know when price is in fact going to start really expanding. And you could see how beautiful this whole dynamic is to help us target the sell side. This is what we used to call gold and silver, right? This is the context. And obviously price respected the wick here, kind of traded a little deeper than people would like if they were bearish. But overall, long term, I'm still bullish on the gold and silver. We're just in a mode of retracement. After all this volatility, there's many inefficiencies. So it moved too quick. So they're now resting in here. Fast downside led to slower, still fast, but slower upside in comparison to this huge decline. And again, this shift, respect to the breaker, respect to the fair value gap on a closing basis here, and then change in state has led us to continue to drop. So I do still believe that we will continue to reach for sell side delivery. We pretty purposely left these equal lows here too, right? It was a balanced price range here from this high to that low, right? This high to that low. So it closed above that, leaving the wicks as a damage inducing vehicle, right? So it just basically took out the sell side, created this wick after a stop run, traded into the wick, created a change in state, and then we just continued to rally higher, right? So again, I think that this high to that low, with this failure swing here, this down movement should be looked at as a mitigation block. It's also a bearish breaker for the short here, this idea. This idea here, if it trades into that, we could look at it now as a mitigation block to continue to go lower. And then, of course, we have the target here, 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 all the previous days and previous weeks lows that are, in that direction. They're going to be a candidate. The closest one is this weekly wick here, the weekly low. It's a previous week's low. So I wouldn't be surprised if they gap through that just to sweep them out and then look to retrace a little bit before they give another leg lower. Or they'll open up, retrace into this, and then look to continue to go lower. I don't see this high getting taken. If this high gets taken, we will then have a fair value gap that's being traded back through, wicks that are failing to hold price, daily order block that's holding price at the same time that's happening, an order block that gets given up, and then a swing high that gets violated. That tells you we are not bearish. We are still bullish. For now, we're going to stick to the fact that we may still be bearish. Okay, just to simply try to target some of this more deep sell side before it gives another leg higher. Okay. And honestly, we see basically the same thing happening in silver. It's really not much I need to really go over with that. We do have relative equal lows here. That looks pretty juicy for the sell side. So yeah, that's going to be my opinion on gold and silver. If we move over here to oil and gas, price is basically doing what we mentioned it would do as well. Price came back down, retraced, respected this, and now it's continuing to push higher. So what do you use to target in this perspective? You'd then kind of move over to the wick, okay? So you target the wicks. Price, if it trades into this, okay, we want to see if that can be treated as a target. Maybe it hits it, retraces a little bit, then violates again, getting us up to here, hits it, retraces, leaves an order block, and then it ramps up, going through that again. Once it gets through this wick, the main objective is the high up here. We don't want to see this go higher. Hopefully this does not happen, because that's going to be a real serious problem. Once we get beyond like 120, 150, beyond that, I mean, that's going to have some real economic hurt on normal everyday people. Gas prices, I mean, look at the skyrocketing gas futures price delivery. It's broken all the targets up there. There's lots of inefficiency to the downside in here. So at some point it'll get down there, hopefully, in the near future. But it will eventually. But, for now, until big developments and big changes happen in the Middle East, we'll continue to see this rapidly rally through to the buy side. And look for any PD arrays, right? Like an order block here for value gap. If you want to make it have less PD arrays, you could then move up to this time frame. You could see the wick, or not the wick, but the fair value gap here. It very, very clearly looks like it's interested in trying to get into that. I mean, we could actually just use this, to be honest. And we basically targeted that. You see how it did that? So yeah, because it's been so aggressive, I wouldn't be surprised if it opens up, declines a little bit, and then just continues to offer continued buy-side premiums after offering short-term discounts. I don't see us getting down into here. There's nothing economically and fundamentally and geopolitically that promotes that type of dip. Everything is pointing to the fact that there's hardship, there's disruption, continuous war over the oil and gas, essentially, and of course liberating Iran. But from a market standpoint, fundamental standpoint, because this is a commodity, geopolitics and what's happening with supply and demand factors, because that's the real reason why this is rapidly increasing, right? When you cut off supply while demand is still higher than ever, there's a discrepancy between supply and demand factors, and that does have an impact on commodities. Not so much in the indices, because there's unlimited amounts, because it's based on dollars and whatnot, in terms of the volume of or the limits and how much contracts are available. But in commodities, it's a totally different world. Supply and demand factors do play a huge role. Gold and silver, right? There's also supply and demand factors there. The supply is very low in comparison to the demand that skyrocketed because of all the uncertainty in gold and silver. They don't have enough supply to meet the demand with everybody trying to own gold and silver. So there's a discrepancy there. And so what happened? Price appreciation, wars, right? The dollar issue, right? The supply and demand factors have led to price just exploding. And it's a safe haven too, on top of everything else. So that's why gold and silver's exploded as well. So when you keep tabs on these things and you understand this about commodities, eventually in the future, you may be able to also anticipate when a commodity is going to explode, okay? It's a very simple way of thinking that's highly effective, because this is just how commodities are. And obviously, there's probably other things on the back end that I haven't mentioned, but this is how I see things. This is how I personally was able to also call gold and silver. I did say that this was also going to explode, okay? And these are the reasons why. I wasn't sure how aggressive this was going to be, because nobody could anticipate what was going to happen in the war with the war with Iran. But, there was a threat of it. And once it popped off, once it was a threat of them closing the Strait of Hormuz, it was a given. So hopefully, I heard that they're surrendering too, so this may be a reason why this declines. If it does choose to decline, there's been an announcement that the Strait of Hormuz, although Iran basically said nobody can pass for a little while, right? They kind of shut it down to the extreme. They've now kind of surrendered, not to the U.S. or anything, but they have surrendered to, some of the other countries, like the UAE, Saudi Arabia. All of them have now been given the go-ahead. Basically, the rest of the world, aside from the U.S. and Israel, can have safe, free passage, no issues to get through the Strait of Hormuz, which is basically 99% of the oil and gas that's transacted through that or moved through that strait. America and Israel don't really have any real stuff. So it's, in my opinion, it looks like Iran is surrendered, at least in on the basis of the Strait of Hormuz issue, to the U.S. because everybody, 99% of the oil and gas can now be moved through the Strait of Hormuz, except the U.S. and Israel. But the U.S. and Israel is like less than 1%. So they may not say they're surrendering, but that seems like surrender to me. They're trying to save face. And I'm sure that there's been talks in the back end that led to this, but and the pressure with the bombing and whatnot. So that's something to keep in mind. Nobody's talking about this. Guarantee you no traders that are looking at the markets have even kept tabs on this or even understand what I just described, how that took place. They probably will eventually within the next week, but this just came out on Friday that this is what's happening. And I hear and see nobody talking about it. So we're ahead of the curve. So if it does look to decline aggressively off this wick here, we may be ready for that as well. I may trade some of these commodities. I may bounce around this year because, there's so many moves that we're calling on multiple assets across the board every week, and they're all going straight to target. And if the S&P, the NASDAQ, if the indices don't open up, we'll be forced to go where the money's at, until at least things clear up a little bit. It seems like things may start to clear up a little bit with the indices, though. So I'm going to still be focused more on the indices. But we'll see. If we get another candle that runs back into this range, that'll be where I draw a line, and I'll be not interested. Even though our strike rate and ability to call setups have still been effective, right? Taken like 3 losses this year in total. Only 3 times was I incorrect on the start of the day, but then later on in that session where we may have initially been wrong, the underpinnings of the market has been correct, and we were still able to get back in line and find something and recuperate any losses. So it doesn't matter what condition, we're able to call the market, and we're highly effective. And hopefully you guys are taking the wisdom from the things we talk about, because I'm showing you on a silver platter how I do it. And I prove that it works. And my students, who are gracious enough to give me their time and support, they're also showing it as well. So it's undeniable. And yeah, students like Tony in the chat, he said, everything went as I marked up last week, as always. You see that? He's been with me only on YouTube, right? He's one of many, but he's doing spectacular, and he sees the value. And I appreciate you saying that, Tony, and always showing up. If only everyone had the patience to sit through these calls and see what happens on a week-to-week, month-to-month, and now a year-to-year basis, they would be they'd be a lot more inclined to focus. But I think it's because I don't shove my profits down people's throat. I made 13% last week alone, but I'm not here to brag. I'm not here to shove my stuff in your face. The evidence is in the chart. But I could be showing the $7,000 I made last week. I could be showing that. Do I feel like doing that? No. It's really no one's business what I do and don't do. The only objective should be to show what's happening in the chart. But that's what people like to hear. That's what they want to see. But it's like not going to make you profitable just because I'm absolutely destroying the market every week. What is going to help you is how I determine what's going on and how I get to the things that I get to. And how do I call the market, as Tony said, every single week? Accurate, right? That's the more important thing. But of course, to get clicks and, instant gratification, well, maybe not so much instant gratification, but excitement, I guess, which I don't understand how seeing other people makes people super overwhelmingly excited, because just because someone's doing something doesn't mean you'll be able to right away. But you could put 2 and 2 together. If we're calling the market accurately every week on every live call, which I do 6 of them every week, you could put 2 and 2 together. If you master the skill set, the WMG Sunday prep call structure, and the daily trading structures, and tactics. If you master them, you'll quickly see that you can do some spectacular things. But you got to give it the time. You got to be here. You got to put the attention span that's like a gnat to the side and realize that not everything can be explained in 2 minutes. I do a pretty good job, though, at least from what I've heard from students like Tony, like George, like Chowezi, like many others. They've told me that I make it pretty simple to understand. And then not only do I explain it in the most simplistic way that I possibly can, I'm also showing it to you live as it's unfolding and narrating every candle by the moment and what we should expect on a second to second, moment to moment, hour to hour, day to day basis. But some things can't be explained in 5 minutes. A lot of it can, which I do. And the markets are complex, so you got to be well versed to really get to those levels that people are aiming at. We can't expect to be a doctor that makes $1 million a year just because we read a book. There's a lot of experience that's required. It's the same with every industry. I don't know where or what has made people not think that that is true about trading and something so complex and valuable as trading, right? I don't know where the disconnect is. I blame social media, honestly. That's what made me think incorrectly at first. Selling this dream that only comes through exhaustive, intensive years of experience, to get to those levels. You can push buttons and make money, but you definitely ain't going to do it in the first year. Generally, I have some students that have. For example, Harley in my private group, in less than a year that he's been with me, he was making withdrawals. Honestly, I can also say that another student, a student named Mike, who started with me here on YouTube, who was only with me for like maybe 6 months, he got a $2,500 payout, and he's only been with me for less than a year. I think it's close to a year now. But back in November, December, he got a $2,500 withdrawal for the first time ever, with him trading for I think a little bit over a year, but with me for less than a year. He went from blowing accounts, not being able to do anything, to $2,500. I mean, that's pretty amazing, and then an investment in me as a mentor to work with me one-on-one for what the price is to what you can achieve, not guaranteed, but with what's possible. I mean, if you put an investment into a mentor, whether it's on, like just to be in the live calls for the very small amount, it's the lowest in the industry with the highest value, but the cost to return on investment that's possible if you apply yourself correctly and do things correctly, because that's what determines it. I mean, it's amazing, for what was it, $50 a month, right? And for some, of course, I have my one-on-one access, but I have to keep that exclusive because I can't help everyone one-on-one. I try with these calls, but the cost of that leading to a $2,500 withdrawal, I mean, you made your money back and some, let alone what's going to happen for the rest of your life. So if you kind of like make the, comparison, it's like, is it worth it? Is it not worth it? I mean, you could be the judge of that, but honestly, it seems like a positive return on investment. And even your time here, that's an investment. And I hope you guys feel you get a massive return on investment there as well. Because I know how important time is. Many times time is always going to be more important than money. They're really close because you need money to be able to enjoy your time, in a lot of cases, to have options at least, So these are things you should think about when you're choosing a mentor. And I hope that you guys that spend time with me on these calls, those of you that have invested in me with my private group and my one-on-one access, I hope you guys feel like you've gotten value and a positive return on investment, because I do try my best to get you as much information in a digestible way as possible. The most dynamic things that I wish someone would have told me in like the first year, it would have saved me about $30,000 of losses. You know, I would have been able to use that later on, right? I've made back anything that I've lost over my life trading. You know, by year 4, I made all of it back. But again, instead of making it back and getting out a drawdown like that, I could have, you know, went off with a bang. But then again, there's a mindset and experience that needs to be cultivated through being in a live account. It can't really 100% be attained through a demo. You can get the operation, right? Like a drill, right? Like you practice plays before you play a sport, right? Because when you're in the game playing the sport, you want to perform properly. But they're two totally different things when you're under those bright lights versus in practice where there's no one watching. You know, the stage fright can sometimes happen. The doubt can creep in. But for someone that's played in a game or something, you know, high level like that, over and over and over again, versus someone that's never played before and it's their first one, the nerves and feeling and way that they operate is going to be different. Same thing if a veteran that's been on deployments like hundreds of times, and then there's a person that just got out of boot camp, when they show up, the stress is going to be totally different. They're going to look at the situation differently than someone that's super experienced. It's the same with trading. There's nothing different, you know? So there's no replacement for experience, and being able to borrow experience like I provide and like ICT a lot of times provides when he's live trading, or just in the videos. I mean, it's totally priceless because you can't replace experience. But if a mentor cares about his students or her students, they should at least try to give the best borrowed experience they possibly can. And I hope that you guys feel that I do a good job of doing that. And I'm assuming that, you know, many of you guys do think so. And based on the results I've seen, I think that, you know, we're doing a pretty good job. And if you guys have any recommendations of how you think I could serve you better, both here and in the private group, I'm always open for suggestions. That's how I've become the mentor that I am. That's how I've been able to discover what I should teach to get people to clarity faster than normal, what to focus on, how to structure things, what's important right now, what's not important, and everything in between. You know, I've learned, you know, what works with students because of students being vocal, because of the criticism that sometimes comes about certain ways that I teach certain things. You know, I'm grateful for it all because you help me do better in the mission that I've set out to achieve, which is to help as many students as I can be blessed by this industry as I have. You know, so I appreciate you guys also just as much as you appreciate me. And again, I hope you guys have been getting value with your time here. It's unfortunate that, you know, people's attention span's not big enough to stick around and listen into these conversations, so then they can see what's happening every single week, because it is spectacular. And I don't like to brag. I'm not really an egotistical person, but, you know, sometimes I guess that's needed. I'm learning in this industry to get attention, to get that attention so then you can bless that person, you know, and I'm obviously trying to get better at that. It's a place where I do kind of lack. I'm not a social media guru. Okay. Like I know some stuff, but I'm still working on building that skill set as well, while keeping my integrity and what I set out to achieve and the rules I placed on myself. I will not shove egotistical crap down your throat. I just won't. But if I have to, because I want to help people, I want them to look and see what we got going on here. Like ICT says, sometimes you got to make a fire because there's smoke, and people go and look and see what's the smoke, right? What's happening? And then they get to be blessed, just like many of us have been by finding ICT, you know. And he did no marketing, yet he has one of the biggest following, if not the biggest cult-like following on social media in the trading world. And he's never spent $1 on marketing, but this stuff just works. he's also been, doing this for literally over a decade, teaching publicly. So, time is a factor as well. I've only been doing it for like 3 or 4 years. But yeah. So again, if you guys have any criticisms or advice or recommendations that can help me be a better mentor, I'm more than happy to take any opinions. But all in all, I hope that everything that we've talked about today in the markets has made sense and has you feeling prepared for the coming week. Thank you guys that stuck around. You guys always get the most value, and that's why you get the most amazing results out of everybody and the most clarity the fastest, because you immerse yourself in the things that I offer. And I couldn't be more grateful that you find value in what it is that I provide. So, thank you. And with that being said, I hope that everything has made sense. Hopefully you guys feel prepared. And George, no worries. Let me know if there's any questions that you have about that particular topic. That bias and narrative is a strong suit here in this community. So, and with me as the mentor. And you're in my one-on-one realm, so you can always reach me at any time, as you have seen. And I'm glad that it helped. So yeah, if you have any other questions, George, feel free to hit me up. Any of you guys that are in my one-on-one portion of things, or just simply in my private group, or even on Instagram, right? If I have time, I'll get back to you. I never leave anyone hanging. Everybody always gets a reply. So, I'm here to help. So if you guys need anything, just let me know. And again, I hope that you guys got value from today. Don't forget to like the video, subscribe to the channel. I know sometimes we forget, but it really does help the channel and helps me get in front of people that may need the help, and maybe they end up getting blessed and become one of the best students, one of the best traders, because of what we talk about here, because they found us. And yes, it's us, because it's not just me. Those of you that have stuck with me, that are making progress, you are becoming an asset. All of you are an asset, but you become even more of an asset when you become consistent and you gain clarity, because you can help pull someone else up, or you can pass it on to your children, right? Just like ICT says, or your friends, or someone in need of a purpose. Trading can give you that. It can really give you that career-wise. And it can help you pursue your other passions as well by giving you freedom. Okay. So yeah, again, with that being said, God bless you guys. Thank you guys for sticking with me. Hopefully you guys got value. Let me know if you guys need anything. And with that being said, is there anything else I'm forgetting? No. So yeah, with that being said, guys, again, thank you. And we'll be live again on Tuesday. I think there's something I'm forgetting to talk about. I'll probably remember later. If I do, maybe I'll go live and make a video about it. But I'll keep y'all updated. I know I'm forgetting something. I just can't remember what it was. Yeah, if I remember, I'll let you guys know. But yeah, we'll be live again on Tuesday at 6 a.m., 30 minutes before the open. Maybe sooner. You guys know that I say one time, but I'm normally early. So yeah, with that being said, God bless you guys. Let me know if you need anything. We'll be live again on Tuesday. Hopefully you guys have a good rest of your weekend. God bless, and I'll catch y'all on the next one.